and welcome. You're tuned into Your Trades with me, Ankita Saxena, and with me is Snehi Shah. In the next half an hour, we'll tell you how the market shaped up today and what are the cues to watch out for tomorrow's market. But first up, let's see how the market shaped up today. In fact, we managed to close above 24,300 levels on the Nifty today. It was a good day coming in there. We managed to hold on to these levels till the end. Also for Nifty Bank, we were trading up 1.3%. Once we recovered from the lows, there was no looking back. There was no sell after that. We kept managing to tick up, on Nifty and Nifty Bank as well. Broader markets also looked pretty good. Nifty Mid Cap was up 1.6%. That was outperforming the benchmark indices. Nifty small cap was trading up 0.7% as well. So, once the indices recovered, there was no stopping for the broader market as well. Largely, the market breadth was tilted in the favor of advances. We also saw the India VIX cool off by 1.5%. Also, a couple of names to mention there. We had Reliance that was really buoying the sentiment on Nifty 50. That was pulling up the index. That was trading up more than 5% in trade on the back of in fact, it added a market cap of 1 lakh crores on the upbeat earnings and the bullish brokerage notes that came out. The numbers were largely mixed, but we did see a double-digit growth in the telecom and the retail segments, and that boosted the overall top line and the bottom line for the company. And good brokerage notes coming in on Reliance, and Reliance finally moved up today, and that was buoying the sentiment for the entire Nifty pack as well. We also had the earnings impact coming in from RBL Bank. We also had Shriram Finance that was in focus today. Shriram Finance was a top Nifty loser because of a weak set of numbers that Shriram Finance came in with. We also had DCB Bank that was in focus. So a couple of banking names came out with their earnings, and on the back of that, they were in focus. DCB Banks posted strong set of numbers. So that was trading up 10% in trade. A couple of other names that were in focus today was, of course, M&M on the back of that deal with SML Isuzu was also a stock that was we were watching out for. We also had the management on our channel speak about the deal. We also had a couple of other names like Hindustan Zinc that was in focus today on the back of results, and also Nivama maintaining a reduce and they cut the target price for Hindustan Zinc to 403 rupees. Hindustan Zinc was in focus. It recovered from the lows, and after the selling pressure, we did see some buying coming in on dips, and that traded up 1.5% thereafter. So largely these were the counters that were in focus today. A couple of other top news is that Snehi will take us through.
Absolutely. In terms of other top news, let's talk about LG Electronics. It's been an IPO candidate for the longest time, and the street has been hearing buzz about this IPO. But we understand that the LG IPO has been put on hold right now. It's been paused on the back of market jitters, is what our sources have told us. Of course, given the way everything's been shaping up on the tariff front, you have volatility in the market, albeit we have done very well today. But nonetheless, on a broader sense, there has been some volatility in the market, and a much awaited IPO like LG Electronics would not want to make its D-Street debut, understandably so, when the market is so jittery. So that IPO has been put on hold, is what sources are telling us. Rajnath Singh has briefed the Prime Minister on security preparedness, so we can expect to hear some announcements on that front as well, and what the next course of action is going to be from our end. And India and France have signed a 63,000 crore deal for 26 Rafale jets. The defense pack to talk about has been up in a buzz in today's trading session. Of course, you had news coming in from Garden Reach, but that was up 9 or 10 odd percent. Other than that, HAL up almost 5.5%. You had Cochin Shipyard that did very well. Garden Reach gave up some of those gains, but nonetheless 8% uptick coming in. Cochin Shipyard was also up 6%. Let's see what a Mascot Dock was up to in today's trading session. Also almost a 5% gain coming in on this front. So you had the defense name that was up, and these names were up in a buzz in today's trading session. But let's make more sense of the kind of moves we've seen today and what we can expect heading into trade tomorrow. We have Richard Jain, Vice President, Equity Technical Research and Wealth Management at Motilal Oswal Financial Services, joining us. Richard, hi, thanks so much for joining us on the show. First up, help us make sense of the kind of moves we've seen. North of 1% gains coming in once again for the Nifty Bank. Sensex has done pretty well. Do you think this is sustainable heading into tomorrow's trading session, or do you believe that this was only a one-off led by Reliance, because you also have a couple of earnings misses that have come on the fundamentals? So how sustainable are these levels, at least looking to you on the charts?
Yeah, hi, very good afternoon. Definitely on the index front, if you look at Nifty's gains, then majorly led by Reliance, but no, I think the broader markets have also done well today. If you look at the banking and the NBFC space, where the heavyweights were looking positive, even the market breadth was good. And ideally, if you look at the levels initially, then in the month of February and March, 23,800 to 23,850 was the major hurdle for the market. And we saw a breakout of this resistance in the first week of April. Now, on Friday's trading session, when the markets corrected, that same level 23,850, 23,800, which was the earlier resistance zone, has now acted as a support. So ideally, I think 23,800 remains a make or break level now. Until this level is intact, I believe that market should head high in next 1 or 2 trading sessions. But we are not expecting any big up move from here. But levels around 25,000, 24,550 could be seen. Now 24,550 is the 61.8% retracement level of the entire corrective phase, which we have seen from that all-time high to the low of 21,750. So I think if one is a very short-term trader looking for trading from a 1 or 2 days perspective, then one should look to trade with a positive bias for potential targets around 24,550, which should be another 200 points up from current levels.
Right, Ruchit. Hi, Ankita also joining in. So these are levels to watch out for Nifty. I want to talk to you about Nifty Bank because that also continues its outperformance, especially the PSU pack. That was buzzing through the day. In fact, that ended the day as a top sectoral gainer with gains of over 2%. Tell us what are the levels to watch out for, and does the positive momentum continue from here on for the entire PSU banking pack?
Banking and the NBFC space have been outperformer in this leg of uptrend, since this bottom, because we have seen that since the mid of March itself, this space has given a good outperformance. Now the PSU banks, especially led by heavyweights such as SBI or some mid-cap names such as Indian Bank, have witnessed very good price volume action recently. So yes, the overall trend, the short-term trend, at least for them, remains on the positive side, and we would expect this momentum to continue. And of course, when SBI results come, that would be a major trigger for the next leg of momentum for the PSU banks. But at least for now, until we see any supports getting breached, I think stocks such as SBI, Indian Bank could do well. So one could be one could trade with a positive bias in the PSU banking space, but be very selective within the stocks and look for stocks which are showing strength and outperforming.
I appreciate that view coming in on the PSU banking space, but if you have to give a couple of stock-specific ideas or recommendations that are looking good amid a market like this right now, where would you be placing your bets?
So one would definitely be from the defense space, because the defense, the entire sector as a whole is doing quite well. If you look at the volumes and the price up moves have been supported by very high volumes, the high top, high bottom structure in many of the defense names are going on. So I think this entire theme should work out in short to medium term and should show a decent up move from current levels as well. HL within this space will be my top pick today. From the defense space, since we have also seen a falling trendline breakout, there's a high top, high bottom structure formation on the daily chart of HAL. So this is one stock which near-term, short-term traders can buy with stop loss below 42.70 for potential targets around 46.80 to 4700. And selective pharma names have started doing well. Off late, we have seen a good underperformance in the pharma because of the uncertainty over tariffs in the US. But we have seen now that some buying interest has been seen. Sun Pharma within this space has given a consolidation breakout today. The volumes are good compared to the past few days, average volume. So for Sun Pharma, I think one can look at buying over here with stop loss below 1800 for potential up move towards its previous swing high, which were around 1920.
All right. Finally, Richard, before we let you go, tell us what are your buy calls, what are your picks for the day?
These two are my picks, which I just mentioned about HAL and Sun Pharma. So I'll just repeat the levels. HAL can be bought with stop loss below 42.70 for potential targets around 46.80. And Sun Pharma could be bought with stop loss below 1800 for potential targets around 1920.
Once again, reiterating your picks for us. On that note, we'll let you go. Thanks once again for joining us. But viewers, as we slip into a very short break, here out the word coming in from Dinshaw Irani, the CEO at Helios Mutual Fund. He is cautious on the market and thinks that the valuations looked a bit stretched. He also shares his list of sectors that he's bullish on. As we slip into a short break, listen in to find out what he likes.
We have our comfort zones. I mean, one big comfort zone for us has always been the BFSI space as such. And you've seen the results out there. If anything, they've been fairly, apart from the microfinance and some of the NBFCs reporting disappointing numbers. But I think the bulk of the reportage from that particular segment has been fairly strong. I think that's one area that we were very comfortable with. Hotel sector, the hospitality sector, I think that is going to be a surprise, because if you look at if you're tracking that sector on the ARR basis and on the ARPOB basis, they've been fairly exciting. I mean, the numbers are fairly high YOY also. Having talked about hospitality, let's talk about hospital, the healthcare sector. Again, that's another area where we're comfortable with. I think that's going to report very good numbers going forward. So I think these are the specific areas that we are comfortable with, and I think that's where we're trying to park our money, given that the way the world is today.
Hi there, welcome back to Your Trades. Time now to bring you some action from the F&O space and tell you what the derivative action is shaping up to be like for the index future trend for the May expiry. No surprises here. We're seeing long build up on both Nifty and Nifty Bank, given the kind of run up both of these counters have seen in today's trading session. So looking good for both Nifty and Nifty Bank in terms of the F&O optimism coming in. India Wix is at the 17 level. Remember, we simmered down slightly. A 1.2% cut coming in on India Wix, almost at the 17 level, 16.9 thereabouts. So looking good for India Wix today as well on the back of this cut coming in. If you take a look at the active call and put writing, let's take a look at the April 30th expiry call buying. That has been seen at 24,400 and 24,500. We do not have a resistance level in sight as of now. So no cap on the upside, looking good for the market. However, on the flip side, very interesting to note, we also don't have a cap on the underside, because 24,200 and 24,100 is where we are seeing put writing. So no visibility on the support level as well. So it seems like it's a free market right now, given the kind of run up that we've seen today. Let's see how much of this is sustainable and carried forward into tomorrow's trading session as well. But nonetheless, it's 24,100 is where we are seeing put writing on the bottom side, and 24,500 on the upside are the levels that we are spotting for on the index futures front.
Alright, so that's how the derivative diary is shaping up to be. But let's go across to my colleague Varun, who's standing by. After a long underperformance, Reliance, that was a top Nifty gainer today, is seeing the best day in almost a year. After the company, of course, announced a steady fourth quarter, and commentary remained rather upbeat by all the brokerages. So let's go across to my colleague Varun, who's standing by with the analysis and what the brokerage firms also have to say about the bullish outlook on the oil and gas major. Let's go across and take a look.
Definitely. So there are many analysts who are having a buy rating on the stock, and in fact, if you look after the results, no doubt there are many analysts who have actually upgraded the stock. In fact, they have raised the target. No doubt the target raise is not much, but yes, if you look around 10 to 50 rupees, there is an increase in the overall target for Reliance Industries. And yes, there are brokerage houses who are actually betting big on Reliance Industries. So what has changed actually, if you look after 3rd June 2024, this is the biggest rally in Reliance Industries. At that time, the rally was around 6%, and now we are seeing more than 5% rally in Reliance Industries. And in fact, in a single day, Reliance Industries have added 1 lakh crore of market cap. So that's a big thing in a market like this. If you look at the results were more or less mixed, because if you look at the PAT, the revenues and EBITDA, that was above our estimate, but the margins, they were actually below our estimates. If you look at segmental performance, the oil to chemical business, it has performed good. It was expected to be subdued. The oil and gas, yes, it was subdued, but if you look at the other businesses, the digital business, that was good. For retail, we are expecting the EBITDA to go up by 10%, but it has increased by around 14.4%. Also for Jio, if you look, the overall results were good, and ARPU especially, we are expecting the ARPU to come at 205 rupees, but it has come at around 206 rupees. So it has outperformed what we were expecting. Other than this, if you look, what brokerage houses are saying, they are saying that the new energy business would be the next leg of growth for this company. And in fact, Nuvama is estimating the new energy PAT share to increase by around 12% by FY30. Also, if you look at other brokerage houses, they are betting big on the retail business, because management themselves have highlighted that from Q1 FY26 you will see good growth in the retail business, and because of this, there are brokerage houses like Motilal, CLSA, Nomura, JP Morgan. They are betting big on the retail business, and they expect a big contribution to come from that. Also, analysts on the street are expecting the ARPUs to rise from here as well. Some are expecting the ARPUs to go by 210, 220 rupees as well. So this will aid the overall growth of Jio going ahead. So if you look at the results, yes, they were a bit mixed, but the commentary was good, And that's the reason we are seeing a big rally in Reliance Industries, a day where the company has added 1 lakh crore in market cap itself.
Well, thanks, Varun, for that. 1 lakh crore market cap coming in on Reliance in just an intraday basis, looking quite good for the stock. That stock has ended the day with gains of more than 5%. But is the period of underperformance getting over for Reliance? Let's go across and revisit Nikunj's take on the same. Let's go across and listen in.
These are not wow set of numbers, but they are marginally better than what the general street estimates were. Incrementally, if you look at all the businesses which they represent, the businesses are getting better, and especially the new age businesses, because that's where the delta for them actually would come in. Now, can these numbers really move the needle for the market per se? I doubt it very much. But Reliance is so under-owned and it has underperformed so massively that if I take the composition of the compulsive weightage component out, you've not seen what could be called as Reliance specific buying. Why Reliance has gone up is largely because of its weightage. But you've not seen anybody really saying that, oh, we are buying Reliance irrespective of the market view. Let's now you started hearing that we are buying HDFC Bank irrespective of the market view. That I think is not there. The sequential growth is not the best way to look at all the basic components. But for me, I think Reliance is now reaching what could be called as under-owned. Incremental good news. Will it make the stock underperform? The answer to that is no. So my whole sense here is that in Reliance, what will you guess? You will have to guess only 3 things. Will it underperform the market? Will it move in line with market? Will it outperform the market? That's the only 3 things you can guess in Reliance, right? I mean, that's how you look at a heavyweight. You look at underperformer, outperformer, or a market performer. I think Reliance has been a massive underperformer. That period of underperformance for Reliance, I think, is getting over. I think for Reliance, you will actually see it now gradually migrating from underperformer to market performer, or maybe market outperformer. I think for market outperformer, they'll wait for another quarter. Something on geo listing. There's silence on lips right now, right? I mean, I was hoping that something would come. A finger on lips, sorry. Finger on lips in terms of nothing has come there. Nothing has come incrementally on what the new energy businesses are going to do, especially in hydrogen. So all that factors put together may not make it an outperformer. But I would stick my neck out and say that underperformer part for Reliance, I think that's getting over.
Okay, so that's what Nikunj believes. The underperformance from Reliance is now behind us for good. But let's go across and revisit some other stocks that were up and away in today's trading session. Of course, Reliance was where the spotlight was, but Ravinder is joining us to share with us a list of all the other stocks that were also in focus today on the back of individual news flows or either Q4 earnings. Ravinder, take it away.
Well, as RBL Bank is in focus, where company has announced its Q4 number, and the bank revenue, bank NII saw down bank NII at rupees 1563 crore, which was down by 2.3% year-on-year basis, and bank was expected to report losses this quarter, but was aided by the contingent buffers, and RBL expect a sharp reduction in delinquencies in this portfolio over H1 FY26. Moving to next, KPIT Technology were also in focus, where KPIT Technology Q4 revenue saw uptick of 3.5% quarter-on-quarter basis at rupees 1,528 crore, and PAT was at rupees 245 crore. If we talk about EBIT margin, then EBIT margin saw uptick of 17 basis point quarter-on-quarter basis. In Q4, deal win stood at USD $280 billion, and board also approved the scheme of merger of PAT Partner Technology Private Limited with KPIT Technology. Moving to next, IDBI Bank were also in focus on Q4 result, where bank interest income was at rupees 6,979 crore, which was flat by year-on-year basis. And if we talk about NII, then NII was down by approx 11% year-on-year basis. Moving to next, GRSC were also in focus, where GRSC has entered into a 30-year lease agreement with Syama Prasad Mukherjee Port, Kolkata, for a land parcel at Timber, Howrah. And lastly, Ultratech Cement were also in focus on back of Q4 number, where the Ultratech Cement's revenue saw a uptick of approx 30% quarter-on-quarter basis at rupees 23,063 crore, and PAT also saw a good uptick of 82% quarter-on-quarter basis. So revenue and EBITDA was in line with the street estimate, and PAT was above with the street estimate. And management has said that the sectors may face short-term challenges, but long-term outlook is indicating signs of improvement with stable demand likely to support growth.
Thanks for taking us through all of those stocks that were in focus. Ultratech, the Nifty company whose numbers came very close to market lows, a 1% cut coming in on that stock. That's what Ultratech has gone home with. But let's talk about the big story of the day, and that has to be M&M's 59% stake acquisition in SML Isuzu. We were lucky enough to catch up with the management of M&M, Rajesh Jejurikar, the executive director and CEO, auto and farm sector of M&M. He said that the company's next significant area of focus is going to be the commercial vehicle segment. As we wrap it up on this edition of Your Trades, let's go across and listen in to understand how the acquisition of SML Isuzu will aid this plan for M&M.
The one segment in the auto space in which we play where we've really not done so well has been the commercial vehicle more than 3.5 ton segment. There our market share so far has been only 3%. It actually pre-COVID till 2019 had gone up to close to 5%. There are several factors, which is the transition to BS6, the shortages on components that we were going through, which we had to prioritize then, for example, fuel injection pumps and so on, which led to a decline in that category to a level at which we are now, and we've improved a little bit over the last year and a half or two. This is the next area of focus for us. Now, it's a huge segment by way of overall value of segment. Profit pool is very good in this segment as well. When you look at they're all listed companies, so we know the numbers of, the kind of profit pool that exists. The size of the market is 130,000 crores plus. This acquisition gives us a strong enough presence to start building on.